Hello, and welcome to the Fall 2014 Birken Road Report for Ion Geophysical. My name is Michael Manseri, and along with my fellow teammates Blair DeBart, Alice Jiranek, and Brittany Nauman, as well as our investment research manager Tolga Ehrman, I am proud to present to you our equity analysis for ocean bottom optimism. Our agenda for today is as follows. We will start with an in-depth company overview covering the business segments that the company offers, revenue distribution broken down by both segment and geographic distribution, the strategy by which management runs the business, and an analysis of our largest shareholders. Using Porter's 5 forces, we will then analyze the industry that Ion is a part of and describe Ion's role within the industry. To give comparison and show Ion in relative terms, we will talk about Ion's competitors and their success in the industry as well. On the same note of success, we will talk about the latest developments of the management team at Ion. We will cover the most pertinent risks to the business, and finally, we will provide our financial performance, valuation, and investment thesis. Ion is an oil field services company located in Stafford, Texas, around the Houston area. However, they have offices globally on 6 continents. The company works to assist its clients in safe and efficient exploration and production of new resources. The company operates with 3 main divisions and conducts 2 joint ventures. The systems division is simply where data is acquired for a client. Furthermore, the company stores large data libraries which assists clients in optimizing their geophysical knowledge. Ion Solutions Services segment manages the entire seismic data acquisition process. The division is responsible for initial survey design and planning, geophysical analysis, and subsurface imaging. The company also offers analysis by their geoscientists to help clients interpret the data more easily and form goals based on information from Ion's GXT Imaging Solutions Group. The software division provides software for vessel navigation, data management, and seismic survey design. Inova is a joint venture between the company and BGP Inc., a subsidiary of China Merchant. The company operates their land seismic data acquiring business through this joint venture. In July 2014, Ion fully acquired Ocean Geo, a Brazilian marine geophysical company that conducts seismic data acquisition. Here are our revenue pie charts distributed by both segment and geographic location. Over the past few years, Ion has focused on its solutions services division, which has grown from 58% to 68% and then 71% from 2011 to 2013, respectively. An estimated 80% of 2014 revenue will come from Ion's Solutions division. In 2012 and 2013, 69% and 73% of sales came from customers outside of the U.S. This number continues to rise as the company focuses on globalizing their solutions division and is committed to finding beneficial joint ventures. Ion plans to assist their clients and grow their business in the following 5 ways. Ion plans to systematically move away from equipment sales and turn its attention to enhancing the solutions division. The company hopes to expand into production and development phases with its ocean bottom seismic service product. Ion plans to increase the number of advanced imaging centers in strategic locations. Most recently, the company has developed offshore programs in Australia, Uruguay, and Canada. ION intends to continue capital support for the research and development of new and current products. The company will turn its attention to advanced software, equipment systems, and derivative products, specifically manufactured by Calypso and Narwhal. Management shared that they were in the process of creating the next generation ocean bottom seismic equipment. Due to the joint venture success in the past, the company plans to continue its search for beneficial partnerships. ION believes that joint ventures will improve client offerings and accelerate business. When looking at the top shareholders for ION Geophysical, institutional investors account for 7 of the top 10 shareholders. Invesco Canada is the top investor, holding 19.85% of the shares outstanding, which is a significant increase from the 8.16% ownership stake last year. Over the past 2 years, BlackRock has also increased its holding from 3.7% in 2012 to 7.31% in 2014. The increase in ownership by these financial institutions could signal confidence in ION's growth potential or its viability as an acquisition target. ION operates in the exploration and production sector, otherwise referred to as the upstream sector of the oil and gas industry. Furthermore, the company specifies its industry segment as the seismic surveying industry because of its niche products and services geared towards the acquisition of onshore and offshore seismic data. We will now analyze the company using Porter's 5 forces. The specialized nature of the seismic data acquisition industry makes the threat of new entrants relatively low. Acquiring new patents and making technology advancements can be timely and costly, but these steps impede a new company's ability to acquire valuable customers. Within the subsector of the seismic data processing services, ION has 5 main competitors that offer a similar set of products and services. This competition allows E&P companies to weigh their options and demand high quality at a lower price. Additionally, the market cost of oil and gas also affects buyer bargaining power. ION relies on third-party manufacturing as opposed to in-house production for several of its key systems products. The company outsources its production of the towed marine streamer and ocean bottom cables. ION also hires third-party vessels to conduct offshore seismic data acquisition. This dependence on third-party vendors creates high supplier bargaining power. The availability of seismic imaging substitutes is low. Although companies that offer similar oil field products and services to ION exist, it is difficult for them to match the same level of ability and precision in examining the Earth's geophysical composition. The 50 largest firms in the geophysical surveying and mapping services industry, which includes ION, account for more than 85% of the sector's revenue. Large companies have advantages in economies of scale, which enable expanded operations and increased capital expenditures. Alternatively, small companies specialize in geographic areas or survey types. As a mid-cap company, ION is both expanding and specializing. This report covers a range of global and domestic competitors with market caps both higher and lower than ION's to offer a full competitive landscape. The competitors reported were selected through a discussion with management and outside research. The peer group consists of CGG Veritas, Petroleum Geoservices, TGS Geophysical, Western Geco, and Wilbros Group. Though the company continues to become more global, ION has a smaller market share compared to its competitors located in foreign countries. It has a high debt-to-equity ratio and the second highest P/E and return on assets. Its high ROA is attributable to the company's efficient use of property, plant, and equipment. Even though ION has the second highest ROA, the company has the lowest return on equity compared to its peer group. This can be explained by ION's asset-light strategy and high degree of leverage in its capital structuring. The table below outlines ION's competitors' basic financial metrics. The latest development in the management structure of ION is the promotion of Steve Bate from Operating Officer of the Systems Division to Chief Financial Officer on November 13th. In July, the company also hired Jamie Seeley as General Counsel and Executive Secretary. As demonstrated in the table below, ION's return on invested capital underperformed its peer average in 2010, but increased over 2011 and 2012. In 2013, certain events led to a significant decrease in return on invested capital. The decrease is the result of costs related to substantial restructuring of the Inova joint venture, legal proceedings with Western Geco, and increased ownership in Ocean Geo. ION Geophysical is subject to a number of operational, regulatory, and financial risks, each of which may impact the future revenues and expenditures of the company. Among ION's various operational risks, demand for ION's products is seasonal, with demand highest in the fourth quarter. This pattern is a result of exploration and production customers forecasting discretionary spending most accurately at the end of each fiscal year, which affects their decision-making about how much capital they can spend on E&P activities. ION's operations are subject to many regulatory risks, including laws, regulations covering the operation of seismic equipment, oil and gas exploration and development, taxation of offshore earnings, environmental protection, usage of local employees and suppliers by foreign contractors, and duties on the importation and exportation of equipment. Additionally, trade restrictions and regulations imposed by the U.S. government affect ION's international business and may prevent ION from doing business with potential customers and suppliers in certain countries. Because ION has a large customer base abroad, the company is exposed to fluctuations in its currency reserves. As ION's international revenues growth rates continue to increase, their foreign exchange risk will increase as well. Our 12-month target price is $3.90, with a rating of market outperform. We expect ION to outperform the market because of expected increase in exploration spending within the energy industry, along with rising oil prices over the next few years. Furthermore, ION's developing systems products will give the company a competitive advantage as spending levels rise. In order to forecast ION Geophysical's future stock price, our analyst team used 4 relative multiple valuation methods: price to earnings, price to book value, enterprise value to EBITDA, and enterprise value to sales. In preparing the relative multiples valuation method, we identified 4 of ION's closest peers with regards to market capitalization and product offerings. Our analyst team believes that the following 4 points will be vital to the success of the company moving forward. Although the current demand for exploration services is low, ION must be prepared for a market reversal in demand within the foreseeable future. Emerging countries are increasing their consumption and production demand will increase, which ultimately will lead to a need for further exploration. The Inova joint venture with BGP Inc. should be a beneficial partnership for ION. It presents an opportunity for the company to establish a presence in China because BGP's parent company is China Merchant. China is projected to be one of the highest growth areas for E&P activities in the near future. Therefore, the partnership will be beneficial to ION because it will give the company access to BGP's relationships and resources in China. Additionally, the company's investment in Ocean Geo will help to continue the shift from exploration to production. Over the last year, the OBS segment has experienced growth of 4 to 6%, and it is the fastest growing seismic market segment today. With the addition of the services that Ocean Geo provides, ION is now able to offer a fully integrated OBS solution. Finally, the exploration and production industry has moved towards consolidation, and large E&P companies are vertically integrating in an effort to limit costs. Since ION's software segment differentiates the company from some of its larger competitors, This technology adds to the appeal ION may have to a larger player that lacks a competitive software division. The Birken Road Reports are produced solely as a part of an educational program at Tulane University A.B. Freeman School of Business. The reports are not investment advice, and no investor should rely on them to make an investment decision. We advise consultation with an investment professional and/or conducting your own primary research regarding any potential investment.